Hello and welcome to the Weekend Investing Daily Bite of 2nd of July. And we had a day where Nifty was, not sure of going up anymore. And there was a lot of distraction from SEBI's notice, show cause notice to Hindenburg and the counter alleged involvement of Kotak Fund in it. So that was pretty much distraction for the entire day. And the biggest news that has come around in the last 24 hours is that there has been a big blow to discount brokers. Some of the broking stocks tumbled because of that, and we'll talk about this in the second half of the market. Where is the market headed? Nifty was totally flat despite going to a new high at open, closed exactly where it closed yesterday. No harm done. I think one step forward and one step back in the last 4 days is still causing markets to go up. So we are quite satisfied with the way the markets Nifty is running right now. Nifty Junior about 0.5% down, still in that consolidation mode. Um, I think it is just buying time so that the averages also catch up. And then once we are closer to the budget, some bigger moves may happen. Mid-cap index coming back and sort of retesting the breakout of that range, closing slightly below at 0.5%. Again, no major damage done. Small caps also retesting the breakout, closing very near yesterday's close at 0.16%. So a very, very sort of a day of inaction from a net close to close point of view. Bank Nifty, however, was the big sort of uh, index which sold off. It had opened gap up, but this SEBI show cause notice caused Kotak to crack a little bit, and that sort of rubbed off on the rest of the pack also. The Adani stocks, however, were rallying despite all this confusion that got created. Private banks and PSU banks both actually got hit to some extent, but HDFC Bank stood out at 1.5%. ICICI Bank, Kotak, you can see both along with Axis Bank were down. State Bank of India was also down. IT stocks have been performing now, I think, third or fourth day in a row. Infosys, TCS, Wipro all doing very well. L&T was doing very well today at 2.83%. Rest autos, FMCG, cements were all either red or flat. Nifty next 50 heat map was more red. You only had Zomato, Motherson, Adani Total Gas moving up along with Bajaj Holding. Rest everything seemed to be red. Naukri, SRF, Marico, Bank of Baroda, REC, Canara Bank, LIC. All these stocks were hitting some sort of a corrective mode in the markets today. FIIs, no good news from FIIs, minus 426 crores yesterday. DII is still buying 3,900 crores yesterday. So FIIs for the year to date are flat, no net buying. DIIs in the first 6 months have bought more than what they bought in the last entire year. So if I were to compare period to period, the first 6 months is probably more than double of what was done last year, which is extremely positive news in terms of fund flows in the market. Sectoral map, PSU banks minus 1.8%. It has done nothing in the last 3 months at zero now for PSU banks. So this is the worst performing sector in 3 months. Near that is also pharma, where 3% over last 3 months. Pharma today also was absolutely 0.1%. And you also had IT actually gaining ground 5.3% this week, 5.15% this month. This has been a outperformer of big proportion versus other stocks over 3 month period at 7.2 and over 12 months at 26.8. Real estate eking some gains at 0.8, but rest of the market completely flat or down. Autos, consumption, FMCG, private banking all down 0.8 to 0.9%. No major moves happening in the market right now. Nifty IT index, as you can see, fourth day running upwards. This 35 400 was a breakout of sorts. A inverted head and shoulders pattern can also be visualized here. The natural resistance will come at the peak of the previous peak. So I think there is some more uh, room to go, 1.17% up today. Even in the long-term view, you can see a cup and handle is getting formed, and beyond this, a good move can start for the medium term. JK Paper was the stock of the day today, up 18.94%. This breakout above the February highs a couple of weeks back was the major trigger, and today was the sort of continuation of that. So within a matter of 12 odd sessions, it has gone up almost 50%. And this is where it was post-election day at 3:45, and we are now at 6:33. So amazing run on JK Paper. In the long term, also you can see it was in this consolidation mode, which has now broken out for new highs to go higher. So big blow to discount brokers. What has happened? Let me just go through, the headlines. SEBI says charges levied by market institutions should be uniform. So what has happened is the stock exchanges and the clearing corporation depositories are called MIIs, right? So market institutions, and they basically charge the brokers for using their infrastructure and the transaction cost, etc. And what they were doing so far was that, let's say you are a large discount broker and you have 5-10% of market share of the market, and so the exchange was giving you an incentive that if you give me this volume, I'll charge you lesser transaction cost. So if, let's say, the transaction cost was 0.01%, if you give me X volume, then I'll give you 20% discount in that. If you give me Y volume, I'll give you 50% discount in that. And these discounts were going to the broking companies, and they were not getting passed on to the actual user. So if I was, let's say, a user of the top discount firms like, maybe Zerodha, Grow, IFL, all these folks, they were getting the discounts from the exchanges for the volumes, but they were not getting passed on to the users. And that is what SEBI has clamped down, that you must give a true transparent transmission of this cost. This should not be where you are making money. You should be making money on brokerage or other things. And which I feel is also a very, very, I would say, a transparent sort of a move. And this should have come long time back. This practice has been going on for, I think, maybe more than a decade. And uh, along with this, practices like giving margins to the broker, and the brokers in turn giving margins to the exchange in form of interest bearing deposits on which they earn interest, is also something that possibly can get clamped down. And brokers, a lot of brokers were making income from all these extra activities versus making income from brokerages, because brokerages anyways had collapsed to near zero in the competitive environment that we are. Trading brokerages as low as 5, 10, 20 rupees per transaction, and when delivery brokerages as low as zero in many cases. So SEBI has clamped down on this practice. Also, there are a lot of measures that are coming in place soon to clamp down the frenzy in the derivatives market. We did a video on that. We'll give a link to that below in the description. How options frenzy is causing the regulator to relook at this entire market. And essentially, uh, it has become too easy for anybody to come to market and trade, whether they are you know qualified to trade, whether they have enough capital to trade, has not been really, we've not been able to curb that, and that is causing a lot of losses to a lot of people. Ideally, I mean, it's a open market situation, so there should not be any clamp down as long as it is not causing a systemic risk to the market. But the regulator feels a sort of a moral obligation that we should not promote activities which cause a path towards gambling and mindless kind of trading in the markets. So the impact on brokers for this is that, obviously, I mean, they were not passing on the discounts to the user, so there will be a significant impact on the revenues of many broking companies. Many of these saw some dramatic losses today. So Angel One, for instance, 8%, GOG 6.9%, IFL Securities 5%. Uh, and if you look at some of these graphs, many of these actually stocks were not even near their highs, and they've already sort of given up most of the gains. So the peak of many of these broking securities companies had come much earlier in the year. Maybe they had run up quite a bit beforehand. And all these talk of trying to clamp down are causing jitters in the investors in these companies. This is Geojit, which was also down almost 7%, has been in a range since last couple of months. Motilal Oswal has been falling since many days post its bonus. IFL Securities also was down, although it has done quite well in the last few months. Bombay Stock Exchange also has been falling since virtually April in the last many months, despite markets going up. So whenever the market related institutions or companies are not doing well while market is doing well, that is a very high probability divergence that is available, that the the companies which offer the platform for the market to go up, if they themselves are not performing and the market index still goes up, that becomes circumspect that the index is getting maintained. There are it is not a widespread um, uh, the gains that are coming are not spread out in the entire market, and there is some creeping slowdown of some sort that is visually seen in these stocks. So this could be an indicator that markets are slowing down. Only a few selected sectors are propping up the market on a daily basis, and maybe there is some sort of a rest or a consolidation phase that is upon us, because many of these stocks have already gone into consolidation of some kind, and that is a precursor to the market going there. So in case you have these stocks, uh, if you are running a strategy, follow the rules of the strategy, no issues in that. Whenever the strategy will exit these stocks, you should exit them. But if you are not, then having a good diversification across industries, of course, is essential, and having some exit plan, because let's say tomorrow there is a clamp down on F&O activity for retailers, for instance, or there is some stringent step that comes around for the F&O markets. All these broking companies are going to be doing a lot of bloodletting, because a main source of their income today is the F&O market and the income that comes from that. In fact, one of the reports that I read today mentioned as much as 25% of profits of one of these listed entities was coming from this not passing on the discount of the transaction cost, etc. So there can be big cuts in the profitability of these companies going forward. So one must take care of that and have a proper exit plan in place. Thank you so much for watching these videos. Please do like or share these videos if you do like them, and let us know your comments about these subjects. We are happy to read your comments, and that gives us motivation to do more. And do subscribe to the channel if you haven't. Thanks. Bye.